today. Now, in a significant move within the private growth equity ecosystem, Singularity Growth, an operator-investor-led growth equity platform, has appointed Mithun Sacheti as its co-sponsor and general partner. Mithun will play a crucial role in the investment committee and actively participate in the decision-making process for future investments. Mithun is an entrepreneur who founded Caratlane and sold his remaining stake to Titan for over 4,600 crore rupees. This move valued the brand at a whopping 17,000 crores, making it India's biggest deal in the D2C e-commerce space. To take up this discussion, we're now joined by Yash, Kela, the founder and chief investment officer at Singularity Growth, and Mithun Sacheti, co-sponsor and general partner at Singularity. Yash, Mithun, many thanks for joining us here on the program. Mithun, I'll start by asking you, when we last spoke, which is when you closed the deal with Titan, and I asked you what you intended to do, you said you're going to take a break for a while. So I would imagine with this decision and this move, the break is now over officially.
Yeah, the break is over. I had a great time, traveled around. Actually, the break was more to figure out what I want to do. And certainly investing was something that I've always enjoyed, and I look forward to partnering with Yash and take this forward. My whole journey, I always felt that investing requires an operator as a part of this partnership as well. And I thought that this investor-operator relationship is something that will help us sort of work with Indian businesses differently.
The break is over. You've decided to join hands with Yash, and this starts your journey as an investor. Is this going to be the only investment-related foray that you intend to make, or are there others on the anvil, others that you are considering as well?
Well, on the operating side, no. I think this might be the only one that I look to do. Of course, on the as participant in other funds, etc., that's normal. One would do that part, but no, on the investing, operating side, this is the platform that Yash and me want to sort of scale up, and we really want to. I mean, I feel there's some skill sets I gathered at Caratlane, and those will be useful to help the opportunities that we see around.
You know, speaking about scale and what you bring to the table, yes, I would imagine that the skills that you acquired as an entrepreneur will certainly be put to use here as well, Yash. But what else do you bring to the table? I mean, what are we talking about in terms of capital?
That's to me?
Yes, that's to you.
Yeah, so, as sponsors, I've seen that most people bring in about 3-4% of capital, and I was very conscious that that's not a number that one should go with. And we're clear that 15% of the capital must come from the sponsors, because that puts skin in the game for people who want to invest as well, and also puts us, we put our money where our mouth is, and we sort of work with that. So about 15% of the commitment should come from us as sponsors.
Okay, 15% of the commitment. Yash, congratulations on bringing Mithun on board. And let's talk a little bit about what this is going to bring to the mix as far as Singularity's growth trajectory is concerned, your investment plans from here on.
Shireen, first of all, thank you so much for having us. Mithun is a phenomenon, and we have been blessed, and I think we've been working together with him, being a part of the investment committee for the last 2 years. And I think we believe that having this operator inside is fairly unique to how a business can grow. We have executed Fund 1 with the guidance of everyone around us. And now Fund 2 will be a larger scale up around Fund 1, which was core, which is participating in companies which are at that cusp of growth. In capital efficient categories, these are companies which are typically between 200 to 800 crores of revenue, and at steady state can generate 30-40% ROCEs. Each pool of capital for us has about 14 to 18 investments. This will be the case, but this corpus is larger, so our check sizes will become larger in the deals that we incrementally participate.
Okay, that's interesting. So, what we have seen in 2023 is that there has been a significant decline, especially when we talk about funding at the growth stage. So, Yash, given the current environment, as well as given where valuations are, do the valuations today give you more comfort at current prices?
Shireen, I think the ecosystem is getting a lot of support from domestic wealth and domestic capital. So we see more and more people who have created businesses, have monetized them participating in this ecosystem. So the ecosystem has got a lot of support from this. We feel that companies which have a good P&L directionally are getting to good cash flows, and there's a balance sheet mismatch. I think those things getting solved for and getting fixed. And more companies now directionally are going to become businesses which are fairly sustainable, viable, and may generate long-term wealth. I think we see a lot of support from the domestic ecosystem, and in the segment of capital that we are in, which is primarily private, selectively public, with a tailwind of growth. We see enough participation, enough tailwind, and enough support from our LPs, and also find the right set of companies which are built with that DNA.
Yeah, Mithun, just to take that forward, we have seen a significant correction. We've also seen companies now much more focused on actual delivering on actual sustainability, bringing down cash burn. And that's a good sign as far as the ecosystem is concerned, as Yash was also pointing out. But what across themes that you are looking at today gives you most comfort, gives you most confidence?
I think this is one of the, to your question about valuation as well, Shirin, the earlier one. I think private markets are in a better place right now than the public markets seem to be at this point. I also think that there's been a knock on the head for most entrepreneurs over the last 2 years because money has been hard to come by, and I'm reading that it's been we've had possibly one of the lowest in terms of this year. And that sort of drives a lot of sense because I feel the best businesses are always going to be built with constraints. And these constraints have sort of created a better environment for us to look at consumer businesses, which will grow with these constraints and thus deliver better return for all of us as well also. So consumer businesses is the larger theme that we're looking at, and that's possibly where I add value as well also. We want to look at that as our mainstay in everything that we do.
I want to get both of you to comment on what you see as far as this private-public market convergence is concerned in terms of valuations. And we're now looking at the possibility of some big-ticket IPOs coming in, perhaps Ola, Oyo, and so on and so forth. Mithun, I'll start by asking you, I was having a conversation with Rajan Anandan just a few days ago, and he said, look, the experience of the way that we've seen new age companies list is that the Indian markets don't really appreciate or like loss-making entities. Given the previous experience that we've seen, what would your expectation really be on the pipeline of IPOs that are headed to Dalal Street?
I have a slightly contrarian view maybe to Rajan on that. I think globally people don't like loss-making businesses, and businesses in the public market are expected to make cash flow. Look at what has happened to consumer businesses in the US that listed as loss-making and didn't deliver the growth, and they've really been beaten down as well. So I think maturity is important when people bring it to the public market, and people should take their time and have patience. When cash flows are a lot more steady, when growth is consistent, that's the right time to bring it to the public market. Till then, I think staying private is the right way to do it. You cannot come to public markets with volatility because that's not what the average public signed up for. And I think it's extremely important as founders, as investors, to be prudent because it's a responsibility to maintain this ecosystem for a long period of time. And the way you maintain is to nurture it. So if you make bad IPOs, I don't think we do any favors to ourselves in the long run.
No, we certainly don't, and no favors to the ecosystem either. Yash, I'll get a quick word from you on this as well.
So, Shireen, I think there is a big temperament shift for the cap table founders as they move from private to publics because they're attuned to raise capital every 18-24 months. Businesses like what Mithun has built, or there are certain businesses which has been profitable and cash flow creative from very early stages. I think for them that journey is easier because they're not attuned to raise capital every once in a while. I think the way that we look at public and private cycles, I think what we see is these public and private cycles happen to be complementary, as at the stage at this point of time where private valuations are fairly favorable and you get good businesses. The way that we look at Shireen is, I think this public and this private public integration for us gives us the upside of higher growth businesses, but also manages liquidity for us. Because our primary base of LPs, they do not want to see capital in the next decade. By participating in businesses and a certain percentage of a portfolio into companies which are getting public or are closer to getting over there, I think helps you manage liquidity better and return capital faster. So I think that is the way that we look at this to sharpen our liquidity curve for our LPs.
Right, Mithun, very quickly, final word from you. Second wind as an entrepreneur investor, or for now, only investment?
For now, investing, but certainly there'll be a second wind.
Certainly, there will be a second wind. Mithun Sacheti and Yash, Kela, always a pleasure. Appreciate you joining us, and we wish you the very best of luck. Thanks very much for joining us here on Business 360. With that, it is time for us to take a quick break here on CNBC-TV18. The news will continue. Don't go anywhere. We're back in a second with more. For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.